for staying with us. We continue to monitor the performance of the cedi, which has broken the 11 cedi mark against the dollar. And the Ghana cedi is likely to endure depreciation pressures in the near term as the foreign exchange market still awaits news on debt sustainability analysis conducted by the International Monetary Fund. That's according to Databank research. However, the syndicated loan of $1.13 billion signed last week is expected to bolster dollar supply and provide some reprieve to the local currency. Here's Charles Nixon with more.
The cedi posted losses in the retail market on mounting demand pressures. As portfolio outflows drained reserves, Ghana's gross international reserves fell to 2.9 months of import cover. This is despite impressive earnings from exports of crude oil and gold. In the bi-weekly foreign forward auction, the Bank of Ghana allotted $25 million, but the resultant bid to cover ratio indicated that demand continued to outstrip supply, although at a reduced rate. The cedi lost about 3.2% in value the whole of last week. It's presently trading at about 11 cedis on the average at the forex bureaus. For now, it's unclear when the cedi's lost fortunes will be found. Analysts will, however, hope the finance minister and his team, who are in Washington, D.C., will fast-track the economic program that the country is seeking to have to address the current economic challenges.
That report by Charles Nixon Kweku Ako-Kumsin is economic analyst with Databank Research. He joins us on Zoom to discuss this report further. Thanks for joining us the first time on the program. We welcome you, Kweku. We recently broke 11 to the dollar, and we are headed to the festive season when we expect more demand for the dollar. Could that affect the strides you have made to slow down the rate of depreciation?
Thank you, Daryl, for putting me on the show. Yeah, so just like we discussed, the strains on or the pressures on the local currency is mainly being exerted due to the negative inflow of negative news, going to the IMF, as well as the successive credit downgrades from the international ratings agencies. We've also looked at certain interventions, such as trying to bolster our reserves with the syndicated loans from the Afrexim Bank and also from the Kokobo syndicated loan facility. These are expected to provide some support for the local currency. However, looking at the imports or the orders that will be coming during the Yuletide or the festive season, we also suppose that these pressures, the depreciation pressures, will continue to intensify on the cedi as such. And hence, we are likely to continue to sustain depreciation losses as it pertains to the local currency.
Yeah, and well, as your report indicates, much depends on how the IMF negotiations go. And so my next question is, what difference will news on the debt sustainability analysis make? For instance, if the IMF decided on debt restructuring, how would that impact the cedi's performance?
Okay, so if the reports on our debt sustainability or the analysis on our debt sustainability is in where the market is of the known, the market would react based off of the indication that is given by the IMF in their analysis, in a sense that if we are seeing as our debts to be sustainable, then in that particular case, the market would fairly continue on with, let's say, a lighter mood or a happier mood. As such, any pressures that we may sustain or any depreciation losses that we may sustain may be at a reduced rate. However, if it comes out that our debt levels are unsustainable, then we could see some further strain on the local currency, where investors would like to also move into safe haven assets such as the USD assets, so as to avoid the defaults or to avoid some of these restructuring issues. Yeah.
And while we are with the news on debt sustainability analysis by the IMF, the government is doing what it can. Recently signed the syndicated loan, $1.13 billion. The central bank is doing forex forward auctions. What difference are these moves making, really?
Okay, so at least bolstering of our reserves also helps some supply-side interventions from the Bank of Ghana. Because you see, what you realize is that in as much as the market is also moved by sentiments on how the currency would be, that's the expectations, we also try to look at the demand and supply dynamics, right? And as such, without some of these supply-side interventions, the situation, which is currently at a 40% year-to-date loss, would actually be a worse situation as such. So, in as much as we see some of these interventions to still depict the higher demand as against the current supply, at least these interventions, if I could say, slow down a bit the pressures that are compounding or being exerted on the city.
Well, I don't know what kind of work you have done in relation to what you think or how you think the city will end the year. Do you think that we may hit more than 12 cities to the dollar by end of year? What's your projection?
Okay, so looking at our projection over here at Databank, we try to analyze as the news trickles in, because you see, we might make projections on us crossing the 12 or not crossing the 12, but it also stems from the information that comes up in the market. For example, if we are to get some favorable news on the sustainability of our debt, then in that particular case, we would expect that there will be some slowdown as it pertains to depreciation. So currently, really, we are trying to observe the happenings on the market and also the news that is trickling in on the market to be able to firm up and then decide on a crossing of the 12 or a maintaining of the 11, if I should say.
All right, Kweku Akukumsin, data economic analyst with Databank Research. I appreciate your time with us and looking forward to having you on the program another time. Well, let's